Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Today we're joined by Alex Stanbury, CEO of Technology Minerals. Welcome, Alex. How are you today?
I'm good. Thank you, Phil. Nice to be here.
So do you want to talk the listeners through what Technology Minerals does?
Absolutely. We are a circular economy for battery metals. We are approaching the critical shortfall in battery metals that's come about because of the EV boom from a two-pronged approach. Firstly, primary extraction, where we have 6 assets globally, 3 in the US, 1 in Southern Ireland, 1 in northern Spain, and 1 in Cameroon, crossing the suite of battery metals, all on the exploration side. So we're looking at primary extraction to feed gigafactories. And then secondly, end of life. So we are a recycler of battery metals. We have a lithium-ion battery recycling plant through the Recyclers Group, which is just being commissioned at the moment outside Wolverhampton. And the idea there is that obviously primary extraction can only be responsible for so much of the supply of raw materials. And it's important from an ethical point of view, ESG point of view, to be able to recycle these materials at the end of life, which has been thus far kind of woefully underrepresented. So we are looking to be the UK's first industrial scale lithium-ion battery recycler. And we, as I said, we will be in production hopefully very shortly. All of our equipment is now on site and being commissioned.
So do you think now, right now is the time for obviously a demand that sort of class as a commodity super cycle, the start of, that there is a real demand for this deficit and the shortfall of the lithium and the cobalt and all these minerals required to put into for the electrification of the world? Do you think you're really at the right time in the market?
Yeah, I do. Goldman Sachs have already said that they believe we're in the beginning of a commodities super cycle here. We have over 230 mega factories being built globally at the moment for lithium-ion batteries. The demand that will produce on the critical materials side is unprecedented, quite frankly. And there's been a critical shortfall in investment in the junior mining space for the last 10 to 12 years. So although there's production out there to meet the current demand, the juniors who have normally been the guys who do discovery basically, and then that's where the strategic side is, and that's where the risk lies. A lot of that capital flew into other areas with quicker cash flow, and so it's caused what's going to be a really critical shortage, where you've got supplies of lithium being, the demand for lithium and cobalt going up by 500 and 1,000% respectively, I think, over the next 5 years. And nickel as well, where the cathodes have gone from 1 part nickel, 1 part cobalt, 1 part manganese to 8 parts nickel. So the nickel market's now gone crazy, as we've seen through the nickel prices. And there isn't the supply out there. So you've now got to scrabble for resources. And previously, where the OEMs have been spending all the money on their platforms and saying we're now all about EVs and putting their faith just in the battery manufacturers to supply those batteries, they're now looking through the battery manufacturers and actually securing supply themselves, because they're so worried about the ability to meet the demand that they're going to have for battery packs for their cars. So yes, I'd say this is a really, really key time.
So today we saw the announcement, the memorandum of understanding regarding the proposed sale, 10% interest in the US cobalt copper properties for £900,000. Do you want to talk us through that deal and how significant that cash, the revenue coming into the company is?
Yeah, this is a really significant deal for us. It's our first deal on our exploration assets. We've always been very bullish on the US critical materials strategy, and we've seen that really fall into shape over the last few months. Obviously, the battery metals have been critical materials in the US for quite a long time. But under the Biden administration, certain new acts have been passed recently that have really ramped that up. And we can see a focus really coming into the space now. We have a very large land holding in the Idaho Cobalt Belt. And we've got 2 projects there, the Imperium project, which is 13,700 acres, and the Blackbird project, which is just over 3,000 acres. And with those, they're contiguous to each other. And with that, we have the largest contiguous land holding in the Idaho Cobalt Belt, which is the only place in the US that grades high enough in cobalt that you can go and mine it as a primary deposit. So we neighbour Jervois. Jervois is a mid-tier mining company who will be the first producer of cobalt in the US, and we surround them downstrike. So in our view, that's pretty critical. We also abut the old Blackbird mine, which is a Glencore property. So yes, strategically, we think we're very well placed. And it's always been about strategic placement, incubation of our assets, pushing them up the value chain, and then bringing partners in who can do the heavy lifting. This sale for 900,000 sterling values those two assets at £9 million, which is, we feel is a very fair and value for such a strategic asset. But also, it's stage one for us of a further US M&A sort of piece of strategy there. And we've also signed up an option with that as well, giving the purchaser a right to acquire an extra 20% of it for 1.8 million. So on the same valuation.
Yeah, I mean, I saw that it kind of garnered the usual. You see the negativity sometimes on the boards, and there was some comments related to the fact that it was a related party transaction. It's difficult sometimes to get around that. But what are your sort of comments regarding that?
It is. I understand that, but we're extremely happy about it. That related party was brought onto the board for their ability to access US M&A and for their US contacts. So for us, this is actually the strategy we've been planning on all along, and not just an inside board transaction. This was all strategic for us in the US. We are a UK company. We have US assets, but we need people with political strength and a wider reach than we do in the US to achieve the deals that we want to do.
Thanks for joining us, Alex. I was intrigued about the other battery plant that's in the UK, the one that's obviously already functioning and stuff. Can you tell us a bit about that?
Yes. So we have two plants in the UK. The lithium-ion one, which we just discussed, which is being commissioned at the moment. All the plant and equipment is now on site. And we also have a plant just outside Birmingham, which is for lead acid. That lead acid plant will be up and running very shortly. We have some significant news to share in the coming week, but I can't say a huge amount about it now. But yeah, we're very excited by both plants and expect to be able to see good cash flow out of those very shortly. But as I was saying to Phil earlier, the licensing side has been delayed, and it's been a frustration for us. But we believe we're at the end of that now, and are looking forward to getting into production and bringing cash flow into the group as well. But it's been very nice to be able to bring cash flow into the group from the exploration side as well, which is always planned to be a self-perpetuating business model of project incubation on a capital-light basis.
Very good. So what sort of revenues can you expect to get from the factory in 12 months' time? Have you got estimations of what you hope the business will produce? I don't mean the lithium-ion one. I mean the lead-acid batteries.
We do. We're commissioning it on a ramp-up basis at the moment. I mean, this is of a sensitive nature, which I'd rather
I understand
do if that's possible, because these numbers aren't all in the market at the moment, and they obviously are sensitive to TM1.
Yep. Okay. No, it's okay to take the fifth on that one. But ultimately, I suppose what I'm trying to get at is, do these factories validate the current market capitalization and more on their own?
Absolutely, yes. Very much so. They're extremely cash generative. The lead acid producers a very nice steady margin and is a very nice business for us going forward. The lithium ion is quite frankly a more exciting business, and one that promises a huge amount of growth as well. But the payback on the plants is extremely quick, and hence being really a self-perpetuating business model. The only time we'd raise capital for those if we decided to accelerate our rollout across Europe, quicker than the current business model. But again, they throw off so much cash that it would be so incredibly accretive to shareholder value.
Yeah, and the deal that you've just done basically in America effectively assumes a valuation of £9 million then on this asset if we've got 10% at 900,000. What sort of potential is in the other 5 ground assets that you have?
Good question. Yeah, so there's currently 4 other assets. So there's the hard rock lithium project in Southern Ireland, nickel copper cobalt projects in northern Spain. We've got a project at the Ernin in South Dakota, and the nickel laterite project in Cameroon. Each of those assets is currently under due diligence by various mid-tier players. And we've had a site visit last week in Ireland. We had a site visit 2 weeks ago in Spain, and we've got a site visit next week in Spain again with a different group. Well, the first group is still reviewing. So we feel that there's a huge amount of value there, and where the way the commodities market is at the moment, and where it's forecast to go because of the demand out of the EV sector and the battery manufacturing, we believe our assets are strategic and are going to be really going to be jumped upon. So, we're excited by it, and it's really a case of watching this space.
I suppose I'm really just trying to get an idea myself. If TM1 just had that in-ground assets, if you like, and I think your current market cap is what, about 38 million, is it? 40 million pounds?
Probably about 40 million today.
Yeah. So are the in-ground assets in your mind worth at least the market capitalization of this company? I don't think that's inside information. I think it's just your opinion of what these assets probably will be worth.
I think it would be coming close to a large proportion of it. There's obviously some value of Recyclus in the share price as it is, but as Recyclus, but I think I definitely think we're obviously a long way from full value here. A long way. So I think the share price as it sits today is heavily discounted, in my opinion.
The factories then effectively are going to be cash cow. But if you were to be able to, have your crystal ball 3 years from now, how many of these factories do you think are likely to be, either in production or on their way to being created? What is the vision for this company?
Our business model is for one of each technology each year. So an extra 2 plants per annum, 1 lithium ion, 1 lead. Distinctly possible, though, we'll end up accelerating the lithium ion side faster than that, because that's really been around a UK strategy. We're in conversations at the moment about accelerating Europe an awful lot faster. We think we have a good first mover advantage here with exciting technology and with our own ideas, And so we are talking to a potential partner in Europe about expansion there. And if we do that, then those numbers will increase.
Okay, and what would happen if you carry on that project cycle of having basically 6 plants in 3 years' time, which is what you're talking about? Do you anticipate that the cash that would be thrown off those companies able to not dilute the share price, or not the shares, but the shares? Or do you feel that you'll have to go to the market to get cash for those things?
No, I feel that, there's... As you grow, it makes sense at times to raise capital because for expansion purposes. But we have through the recycling side, we have enough cash that we can build 2 plants a year without having to go to the market. But there are times, especially at the beginning, where we have a first mover advantage, and if there's an opportunity here to roll this out faster and gain the contracts in Europe, then it makes sense to ask shareholders to support that, I believe, and we can grow the company an awful lot quicker. But the business model as it sits can be self-perpetuating. But as I said, there are times when it makes sense to raise capital and deploy it quicker.
So basically, in a nutshell, you listed in November, right?
We did.
Yeah. So it's TM1 listed last November, so relatively new to market. Your mission is to secure a sustainable supply for battery metals. You've got mining exploration projects based in safe or relatively safe jurisdictions that do not pose elevated levels of political risk. You've got the 49% owned partner recyclers, well, obviously to help to create that new circular economy for battery metals. And you've already made great progress since listing, really. I mean, is that a fair summation of where we are right now?
I would say so, yeah. We're really happy with the way things are going. As I said, there have been a couple of delays on the recycling side, but things are never quite as you want them to be, and delays will happen. But we're extremely happy with the developments up there, and the way the critical materials markets are moving as well played very nicely into our strategy. And our strategy is of a project incubator around these strategic assets.
I noted the news that I think in February that Arden, the house broker, put together the broker note, research note, and they stated that there was some better than expected mineralization at I think it's your Spanish Astomet cobalt nickel project, and they put effectively on a buy rating on a 7p price target for the stock.
That's correct. Yeah. I went down to Astomet actually about a month ago and was down the mine there because there was an old mine that was operational in the late 40s and early 50s, and they weren't looking for cobalt at the time, and the amount of mineralization that's been left there is incredible. It's a really quite a beautiful thing to see actually. So we are currently doing further exploration there, and going to be drilling on the plateau, and then going to be doing drill work inside the mine as well. But that's where we've got a huge amount of interest in that asset as well, being in the heart of Europe really, with very good grades of cobalt and nickel and copper.
So you've made a lot of progress, Alex, since you came to market. What price did you actually list up?
2.25.
Okay, so we haven't really moved a great deal since the listing. And you've made
3.25 now. We're at 3.13 today, so that's a fairly significant move. But we were up at 5.5 at one point. But I think there has been a little bit of frustration over the time it's taking recyclers to get its EA licenses, and we certainly stick our hands up there and say that we'd hope to get it done quicker, but we believe we're almost there now.
But basically, we've got two businesses which should create a great amount of cash coming off from recycling, and something that really the government and everybody else should be pushing as time goes by. And I think ultimately, if we were to have a crystal ball again and look 5-10 years down the line, there's no way that there's going to be enough of these plants available to do the work that is going to be, because they're just not being built, I presume. So hopefully there's going to be a massive rollout of these things as time goes by. And secondly, the rare minerals that are required for the batteries are going to be in massive demand, because there just isn't enough of them, as you said earlier, I think, whether that be cobalt, whether that be nickel, whatever part you want to look at. So, yeah, I think the potential here is huge. And even if there are slight delays, I think people should really be thinking about the future here, because this EV train isn't stopping.
Absolutely, I totally agree with you. And everyone we speak to in the market who have lithium-ion waste are so happy to talk to us, and so happy to have someone that they can deal with, because it's a real problem for them, and we are set up to be a problem solver for the industry, and it is a massive problem. So we're very much looking forward to being up and running and being able to solve those issues. But the conversations, we are being approached on a daily basis.
Alex Stanbury, CEO of Technology Minerals, thanks very much for your time.
Absolute pleasure.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.